It's
Is it
happening.
going?
Hi,
Oh
everyone.
my gosh.
We're here. We're back. And it's time to talk about some stuff.
This is it.
This is what you've all been waiting for.
I got my grilled cheese sandwich, and I'm ready to go.
Ben, I still feel bad about that one time when I ate your leftover yeasty rolls.
I don't even remember.
Okay, good, because I feel really bad about it.
Guys, do you know what episode number this is?
This is 51, right? Or is it 52?
This is 52. Like the
Oh,
number of weeks in a year.
oh, we've been doing it for a year.
I think we passed our like anniversary last week or something.
We
But
missed a few episodes.
right, episode count wise, this is a year's worth. So congrats,
Wow.
folks.
So,
So
what are we talking
how
about?
last week, guys? To bring us back to our roots, what the heck happened last week?
What do you mean what happened last week?
That's just what we used to always say at the beginning of every episode.
Oh yeah, we did. We did have a. It was a
We
lot
did.
more structured.
But
Yeah.
specifically, Ben, I'm quoting this article because I know you like Barron's, and this is a Barron's.
I probably already read it.
Well, there you go. But it says the stock market had a wild week when you look beneath the surface.
Hmm.
And the whole point is there were like crazy events that happened, and the stock market went up and down a little bit, but it ended the week just kind of flat.
Hmm.
And it's done that for a couple weeks now.
Yeah. So
And
Kangaroo market.
for me, it's like there's always, I don't know, like we got this announcement of Biden's whatever plan, and that sounds exciting. Government spending going into the economy, stocks go up. Then Biden says how he's going to pay for it. Oh, taxes go up. Better bring stocks back down.
Yeah. And
that's how
people
it do
selling
go
stocks.
sometimes.
Yeah. Um, hey, but he didn't talk about wanting to tax unrealized gains, so that's good.
Whoa, was
Oh,
that
that's
on the
nice.
table?
That was something that they briefly talked about at some point, like in November, and I'm
Wow.
very glad they decided not to
That's
do
some
anything
big
like
dumb
that.
stuff right there.
Yeah.
That would be kind of wild because that means you're like taxing a market boom. The market booms,
They might
and
as
that
well
means
tax me for my estimated salary 10 years from now this year because it probably is going to happen. I'm probably going to make money 10 years from now,
Yeah.
so I should probably get
Right.
taxed today for that.
Yeah, no, I think
It's
it'd be
only
terrible,
fair.
but- so I
well,
I
okay,
think they
so it's
realized
a good
that they-
thing that didn't happen, I guess.
yeah. But I mean, none of it's even passed yet, so
But also, then you get the double whammy of then the Fed weighs in on something. And the whole point is supposed to be government does what it needs to do, and the Fed keeps the long-term economy okay.
yeah, the Fed
That's
should
what's
be
supposed to happen.
not
And Jay Powell
influenced.
seems pretty confident that things are fine. Everyone's like, oh, inflation. And he's like, guys, it's fine. Rates are so low. If inflation looks like a problem, we'll bump them up a little bit. But right now, it's fine.
Yeah.
Let's see the past month here.
I want
Yeah, that's pretty nice.
I
And
want
my
him to
personal theory is that the age of big market crashes is coming to an end.
which is sad.
Wait, really? What makes you say that?
How are we
I
so-
think, like, let me expand upon my theory. So, back in 2018, about, we said, hey, it's been a decade since that last big market crash that took years to get out of, like normal market crashes.
Mhm.
We're due for another one. Then we're all like, hey, we've hit our longest bull run in history. This is crazy. We're due for a crash. Then COVID hit and there was a crash. And then we bounced back like instantly because the systems were in place to say, hey, economy, don't worry. We'll buy bonds. We'll give stimulus checks, things like that. And it got back on track. And I
Joey.
think that the powers that be have become more experienced with crashes and know how to make them not such a big deal.
Yeah,
And
but
so I don't think downturns are forever gone and there's never going to be a market correction, but I think we're going to see them be shorter and shorter, like
I
this
I
last
think
one.
you could argue that maybe this one was just, one that they found with the things they've learned in the past, they were able to control it easily. But I don't think that would prevent some unforeseeable event in the future that could, you know, cause even more of a crash. Because
Yeah, there could be like a
realistically,
global pandemic or something.
It
Something
could be like
crazy.
really
okay,
unexpected, get out of control, and then just
but
there's the pandemic.
largely, I mean, other than like service industries, most businesses kept going
Yeah.
largely unaffected. So it
It's true. There
really,
was a lot of business that was able to keep happening.
yeah. So I don't know. I feel like there could be something more damaging in the future that could cause
I
one
mean,
heck of a
okay, true.
crash.
We could still have an apocalypse. Things could get nasty out there. But I'm just starting to think, I think the financial part of it, like a crash like the 2008 crash, that wasn't spurred by a virus. That was
Yeah.
the financial system being broken. And I think things like that are going to get more and more under control. Or at least when they go out of control, there's systems in place to make it so we don't feel it for years and years.
Maybe. I think of it more as um, like learning how to build a house of cards. And early on, for the majority of the stock market, we didn't really know what we were doing, so the tower would fall pretty quickly after building it up.
Hmm.
But now, over the
Mm.
past like
And the
20,
tower being high was a predictor of it falling because it's like, oh, it's getting unstable
yeah,
now. It's gone
yeah.
up too
And so
long.
like for the past 20 years, we've now found a bunch of fancy ways, longer than 20 years, but we found ways to prevent the just complete collapse, or we found ways to not make the entire structure fall down.
Right.
But
Yeah.
we
Well, and
and
talking
these
about
small and
the
these
last 20 years,
yeah, go for it.
what's happened in the last 20 years is the internet.
Mm-hmm.
And so
More
I think it's
information.
the physical infrastructure of the economy doesn't matter as much for keeping things going. And we saw that firsthand in the pandemic. Work just shifted to online and things kept trucking along.
Yeah. So it all depends, I guess, on your perspective. Like theoretically, I guess if we keep advancing and finding solutions that help keep the house of cards stable, it could go on forever. But what we're doing is just making a larger and larger castle before it will inevitably, I guess, collapse.
And then the crash could be even more
Yeah.
terrible.
Unless the internet is like the hot glue of a house of cards.
Mm.
You just cement it in
Yeah.
place. Got a good foundation.
Who knows? We'll wait and
No,
see, I suppose.
Joey, we know we're experts.
That's
We're
right.
experts in the field. We're out there every day.
But
Yeah, I build houses of cards for work every day.
and I guess this whole conversation is kind of relevant to the actual like stocks I want to bring up because if I'm confident that stocks are going to keep going up relatively stably, that's why I decided like, okay, I'm going to make a bunch of my portfolio be based on the S&P 500, which I don't know, maybe that makes sense, maybe it doesn't, but regardless, that's
Yeah.
what I've been doing. And I've learned some neat things as I've delved into the different industries of the S&P 500 because my goal was to look at each industry, decide how much of my portfolio I want invested in that based off of how large it is
Mm-hmm.
in the S&P 500. And some of the industries I just ignored, like oil and gas. I don't want to be invested in oil and gas right now, so I just opted out of that one.
You. Oh, okay.
I want to bring up
Is it
some
because of
neat
is it because of the current political atmosphere, or just why no oil
It's
or gas?
because I feel like oil and gas as an energy source is on its way down versus
Yeah.
renewable energy.
Okay,
And
Elon.
then also there's the political stuff about its environmental impact. And so,
If you're looking 20 years from now, it's very likely that oil and gas stocks will not be doing so well. They could have a run up, in the next year or some short term in the next 5 years, but I don't think it would last long.
right, they could maybe they can figure something out, pivot
I
to
gotta sneeze.
a better solution.
Now I don't have to go to
But
work for
I
a
don't know.
week.
That was just one of my personal choices that I decided now.
Ben, don't ever do that again.
But I mean, I decided not to invest in real estate stocks either because a lot of my money is tied up in a house right now. So
That's
Yeah.
fair.
You've already got that percentage chunked away.
exactly. Other things are just like so small anyway that I'm like, it's not worth me doing research and spending time to make sure that I'm invested in the marine industrials sector. I just
Why not? That's the
'cause
next frontier.
it's 0.03% of the S&P 500. And it's just,
See,
I don't know, it's not worth it for me.
Joey, that's a losing mindset. You you got to invest in everything.
I am invested now in 30 different industries.
Wow, that is a lot to keep
Wow.
track of.
That's a
So
lot.
yeah, it is a
Yeah.
lot to keep track of, but I enjoy doing it because my strategy is do one industry a week. I have between 1 and 4 stock picks for each one. It's like all the smaller ones are only one stock. Software, for example, I have a couple because those are bigger industries, market cap wise. But that way, once a week, I can look at that little group of a few stocks, decide if they are the ones I still like the best in that industry, or if I want to cycle them to something else. And then also if I want that percentage to be my target percentage of that industry. So it gives me something to do every week. But I want to bring up some of the interesting tickers and things I found while I was doing this exercise, which, by the way, I can't say that I recommend this strategy because the workload gets overwhelming pretty fast. And there were a lot of industries that I was like, okay, I'm just going to buy an ETF for this whole sector because
Yeah.
it's just too much.
Shoot me some tickers, Joey. Let's get some action going.
All right, so first off, I just want to point out that while I was doing this, Microsoft, Apple, Amazon, and Google, big names, you probably heard of them before, didn't show up in any of my research. I'm like, wait a minute, how did I miss these stocks? And I found out that in Fidelity's stock screener, the default market cap window only goes up to 900 billion. And so these stocks were too big
Nice.
to show up. So I just thought that was interesting. But the first stock ticker that I think you should pull up there, Ben, is AVLNF.
AVLNF?
Yeah, AVLNF.
Show me the money. Advanced Materials.
So these guys are metals and mining. I think they acquire and deal with rare earth metals.
I do like that price point.
And I was telling you guys a little bit about these last week because that's when I found them. But I don't think we brought it up in the episode. They, for forever, have always reported $0 in earnings.
Oh yeah, you did bring that one up.
They make it a wash every single quarter, $0. And the other weird thing is their market cap. Fidelity seems to think that their market cap is 25 billion, which would put them at the largest end of metals and mining.
Yeah, that's pretty high.
They're not that big. It's supposed to be like 70 million. So I don't know if that's Fidelity's fault or what. but I don't
Did
know.
you
I
ever
can't
figure it
figure
out?
this company. They're weird.
Well, speaking of weird companies too, did you guys hear about that? It was a Planet Money episode where it was a $100 million deli.
What?
It's a single deli in New Jersey that is publicly traded. It's just a single deli
What?
with like 4 tables in it, and it's publicly traded, and the market cap is $100 million.
That is like an NFT for that deli.
Wow.
Yeah. Um, they determined that it was a company where they were trying to do a reverse merger. Like they think a Chinese company was trying to reverse merge with this company that was already on the stock
Oh.
market,
Interesting.
but it hadn't happened yet or didn't go through or something. And wait, do you guys know what a reverse merger is?
Nope.
I mean,
I'm
it's probably
guessing
like
it's
merger,
the
but
opposite of what a merger is.
It's like so a SPAC, they get a bunch of money together and they go find a company to buy. And so the SPAC is already an entity on the exchange.
Mhm.
So similarly, a big company that wants to be publicly traded, they find a small company, that maybe isn't doing too well, and then they just buy up that small company with their bigger company, and they can shove everything into that ticker under that company. Yeah. But you guys could check it out if you're interested. I thought it was really cool. I listened to it yesterday.
interesting.
That's wild.
So I don't know, mate. But this company's been around for a while, though.
Yeah, they have. It's been like 1991. They're a Canadian mining company. I looked more into their stats. They have 5 employees.
Those are some valuable
So-
people.
Gosh,
My goodness.
yeah.
Right? Their income per employee, though, is negative $2 million.
What?
Oh my gosh.
But their revenue per employee is $1,500. So they are like burning $10 million a year and somehow making exactly that much, give or take 1,000.
That's pretty
And
wild.
it's just like, but they have like a real website. They look like a totally normal company. So I'm thinking like, do I just not know something about metals and mining and this is normal?
Well, have you tried going onto the SEC website and like looking it up there?
SEC website. I haven't.
Because there could be more explanation on there.
I'm not
What is
sure.
it?
I was
what-
thinking about calling their investor relations
That'd
number
be
and just
fun.
asking, like, hey, what are you?
What's going on here, guys?
I haven't done it yet, but
What was the ticker again?
AVLNF. Avalon Advanced Materials.
That's pretty crazy.
But yeah, it was just kind of a nutty thing I found. Oh, also their stock splits. One time they had a 500-to-1 stock split.
Holy moly.
And almost immediately after that, yeah, on the same day, they had, get this, a 0-to-1 stock split.
What?
What is happening
So-
with this company?
Right? It just, I don't know. It seems shady to me.
Man,
Wait,
I want
It
to.
was an interesting.
We got to get in contact with their accountant. Hire them
Yeah.
for Engineering Money podcasts. Get us publicly traded, and just do some wild stuff.
It's
Joey,
like,
yeah,
hey,
we
guys,
gotta-
a 0-to-1 stock split doesn't really add up.
We got to solve this caper next week. Because I
So
don't
check
think we're
back in
gonna do
next
it this
week
week.
for
Yeah.
development on the investigation. But let me get to my next industry that I wanted to bring
Well,
up.
you have 20 seconds to do so before I cut off.
Oh, we
Oh,
could go a
shoot.
bit over.
Wow.
No, we're not going
We
over.
can go
Tim.
on that for
We're
that.
not
Well,
going over.
Uber and Lyft are considered trucking companies, so LOL. I think that's funny.
Why are they considered trucking companies?
They just are. They're trucking.
All right, thanks everybody for listening this week. Put in the description your favorite type of truck.